Welcome back to Candlestick Signals for today's market, September 12th, 2025. Buckle up, investors, because we're about to dive into a roller coaster of candlestick signals that could make or break your portfolio. From doji indecision to hanging man warnings, today's market is a technical analyst's dream or nightmare. Are you ready to decode the patterns that could shape your trading strategy? Let's jump right in. Our equity markets today showcased a fascinating interplay between macro trends and microstructure dynamics. Expectations of Federal Reserve rate cuts and ongoing sector rotation painted a complex picture, with small cap and value stocks continuing their impressive outperformance amid record high index levels. Investors strategically rotated into undervalued segments, propelling real estate, communications, energy, and healthcare to the forefront based on their attractive valuations. Meanwhile, major indices like the S&P 500 and Nasdaq experienced robust participation from both institutional and retail flows. Let's break down the most prominent candlestick patterns observed across the U.S. stock universe today. Doji and near doji patterns dominated the landscape, with over 400 instances across all market caps and sectors. This prevalence of indecision signals reflects investors' cautious stance as they await further market direction. The hanging man pattern made a striking appearance, with over 800 occurrences concentrated primarily in high-cap utility and energy names. This ominous signal suggests heightened bearish reversals in these traditionally defensive industries. Bearish engulfing patterns emerged in more than 200 instances, particularly among large-cap and energy companies, highlighting a shift towards risk-off sentiment. On the flip side, bullish engulfing patterns were observed in roughly 80 to 90 tech and small-cap stocks, indicating a rotation into growth and recovery plays. It's crucial to note that all these counts are derived from daily candlesticks, capturing today's market dynamics and sentiment within the standard one-day duration bar. From a technical interpretation standpoint, today's landscape presents a complex mix of indecision, reversals, and selective risk appetite. The overwhelming presence of bearish patterns and high-cap utilities and energy serves as a stark warning to traders, signaling ongoing sector rotation out of overvalued defensives. Conversely, bullish signals and undervalued growth, real estate and communication sectors support the ongoing hunt for relative value. Diving deeper into sector and stock highlights, utilities and energy sectors stood out with their high capitalization and an outsized count of hanging man and bearish harami patterns. This reinforces signs of overvaluation, sector fatigue, and potential for capital outflows. The utilities sector, in particular, saw a staggering 800 hanging man patterns, primarily concentrated in large-cap names. Its bearish signal, coupled with the sector's overvalued status, suggests that investors should exercise caution in this traditionally defensive space. On a more positive note, the technology and communications sectors were notable for their bullish engulfing and harami patterns, especially among small and mid-cap growth stocks. These sectors are currently at or below fair value, supporting further upside potential. The technology sector, for instance, witnessed approximately 90 bullish engulfing patterns, predominantly in the small and mid-cap segments. This bullish sentiment aligns with the sector's fair to undervalued status, indicating potential opportunities for growth-oriented investors. The real estate sector emerged as an intriguing player in today's market, showing an uptick in bullish harami and reversal patterns as rates trend lower. This sector's undervalued status, coupled with improving valuations and fundamentals, makes it an attractive proposition for value hunters. Approximately 50 bullish harami patterns were observed across all caps in the real estate sector, signaling a potential turnaround in sentiment. In the healthcare sector, medical device and consumables, sub-segments provided bullish reversal signals, especially in undervalued small and mid-cap names, despite sector-wide choppiness. The sector recorded around 50 bullish harami patterns, primarily in the small and mid-cap space, suggesting pockets of opportunity amidst broader market uncertainty. Sentiment and outlook analysis based on today's candlestick signals and pattern concentrations reveal a tactical rotation into undervalued value and small-cap stocks. Simultaneously, profit-taking and defensive positioning prevail in traditionally overvalued high-cap sectors like utilities. Sentiment remains constructive in technology, communications, and real estate with medium-term potential upside. However, large-cap defensive sectors warrant caution due to growing bearish pressures. To provide a clearer picture, let's summarize the key sectors and their respective candlestick patterns. The utilities sector, dominated by large-cap stocks, saw over 800 hanging man patterns, signaling a bearish outlook for this overvalued segment. Energy, another large-cap heavy sector, exhibited over 200 hanging man and bearish engulfing patterns, reinforcing the bearish sentiment in overvalued areas. In contrast, the technology sector, particularly in the small and mid-cap space, recorded approximately 90 bullish engulfing patterns, supporting a bullish outlook for this fairly too undervalued segment. Communication stocks across all caps displayed around 50 bullish harami patterns, aligning with the sector's undervalued status. Real estate mirrored the communications sector with about 50 bullish harami patterns across all caps, further emphasizing its undervalued position. Lastly, the healthcare sector, focusing on small and mid-caps, showed roughly 50 bullish harami patterns, indicating potential in this undervalued space. As we conclude our analysis for September 12, 2025, it's evident that today's market was characterized by a sharp divergence in candlestick sentiment across sectors and capitalizations. The highest counts of bearish patterns appeared in overvalued large-cap utilities and energy stocks, serving as a cautionary tale for investors heavily exposed to these traditionally defensive sectors. On the other hand, undervalued industries such as real estate, communications, and select healthcare and technology names generated the most bullish reversal signals. These sectors are supported by fundamental and macro tailwinds, making them attractive targets for value-oriented investors. For traders and investors looking to capitalize on these insights, it's crucial to focus on daily time-frame candlestick patterns for optimal risk calibration. The most promising opportunities appear to lie in small and mid-cap stocks within sectors flagged as undervalued. Real estate and communications, in particular, offer the best value across capitalizations, with their current 7% plus discount to fair value providing an attractive entry point. As we move forward, keep a close eye on how these patterns evolve and whether they translate into sustained trends. Remember, while candlestick analysis provides valuable insights, it should always be complemented with fundamental research and broader market context. That wraps up our candlestick signal analysis for today's market on September 12, 2025. Stay tuned for our next update. We'll continue to decode the market's technical language and uncover hidden opportunities in this ever-changing financial landscape. And thank you so much for watching. I hoped this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment. Smash that like button. Subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.